The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom and Tommy O'Brien.
Welcome, folks. I'm Tommy O'Brien, joined by Tom O'Brien, and we have a unique day because we have negative markets to start things off. Looking at an S&P negative by 10 points, trading at 2741. NASDAQ negative by 42, or 0.6%, trading at 7121. And that Dow off 84 points, trading at 25,301. Morning, Tom.
Morning, Tommy. How you doing?
Doing well. How are you?
I'm doing great, man. Well, you know, it's intriguing. It's like yesterday you had the Russell 2000 fail. It took a long time to get up there, and it's going to be intriguing to see that, okay, is that what the market was waiting for a little pullback here? The bonds, of course, the bonds are ready to dive off the cliff. The bonds are testing the 2013 swing low, folks, okay? You know, we've been in consolidation since then, so it's pretty wild. Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade Think or Swim. And, of course, folks, remember, every trading day right here, 11 to 12 Eastern Standard Time, you want to understand options upside down. You want to understand futures, defined risk. Great program, no matter where you are in the country and the world. Just go to TFNN.com, hit Tiger TV. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. Happy Wednesday, everybody.
Happy Wednesday, man. There's no doubt. There's no doubt.
Right.
And you know what's going to be wild, Kevin, is that I'm actually broadcasting live from the Orlando Convention Center. It's the Builders Expo. And what a great day to do it, because Lennar comes out with the numbers. They missed their numbers, but yet guess what? They didn't push it down. It's like,
well, Tom, I think what all traders and investors need to get ready for here is that number looks good. They beat on revenue. $1.29 a share doesn't look bad, but the expectations were pretty high.
Yes.
And I think that's why, even though it's considered a miss, I don't think they're really going to kill the stock here. And once that conference call starts, you know it's all about how they guide in looking forward. And I think that's something that could creep into a lot of earnings reports here, is lofty expectations for earnings.
Yes. Well, it's an impressive performance in the last hour and a half. I can tell you that. I had one of the Tigers text me first thing in the morning. Said, "Tom, Lennar's down 5%." I was like, what?
Yeah.
Guess what?
Yeah,
it opens up.
It was surprising, because how in this market, with what's going on with housing and what's going on with all these housing numbers, could one of the major home builders in the United States miss?
Yeah.
Right?
Yeah.
That was kind of a surprise. And it turns out, I don't know if they missed. I think they missed expectations, but they made $1.05 same quarter a year ago. They made $1.29.
Right.
Doesn't sound like that bad of a number, and they beat on revenues.
Right, and what they're saying that they're missed on lower income from land sales due to a large transaction that Lennar had pushed into next quarter to benefit from the lower tax rate. Oh, there it is. Oh, that's interesting. Okay, so they pushed it forward. Oh, that's smart, man. Okay, right.
See, this is another thing, Tom. You just made a great point here. This is what people are going to have to understand about everything going on with tax reform. Goldman taking a $5 billion charge. Well, that's not necessarily negative. It sounds terrible, right? When J.P. Morgan releases on Friday, they're going to take, it looks like about a $2 billion charge. Citigroup, $20 billion.
Yeah,
so
and
a lot of these firms, you've got to understand what, if they're doing very well overseas, it's going to cost some money to bring that money back home.
No doubt. And that's pretty cool, man. That's because the ones you're talking about, I believe, in non-cash charges, right? Because that's the tax credits they could have got. In Lennar's case, this would be they're going to bring income in, but they said, hey, I'm not going to bring it in before December 31st. I'm bringing it in next quarter because the tax rate is lower. Yeah,
right.
That's why
it'll benefit them. They're actually playing this well.
Yes.
Right? Deferring them the income received till next year, this year, when a lower tax bracket kicks in.
Exactly. Pretty wild.
Smart move.
Oh,
right?
Big time. The bonds. Oh, so this is going to be intriguing. We've seen this so many times that it's at the cliff, ready to dive off the cliff, and we're sitting there, man. Like the 10-year is down 7 ticks. When I was bringing this back this morning, Tommy and Kevin, it's literally laying right at a 2013 swing low, and we're at 122.27. Now, if this thing breaks, it looks to me like it go to 117, which is going to bring those rates up to like 2.8 or something. So that's pretty intense.
Right. This is a pretty interesting place we're at right here. As we come up, this 10-year yield as we sit right here is 2.58. So,
right.
And it had a 2.595 high today. So it's getting close to those highs of at 2.6%. I personally don't feel that 2.5 in the yield was that big of a deal. 2.6, remember, that's last year's high.
Yes.
That's going to be a big deal to get through 2.6. And if it does, look out.
And how about that rhetoric out there, whether it's rhetoric, but the reports, it's on the front page of CNBC and Bloomberg, just talking about that maybe China pulling out and buying, U.S. Treasuries. That's obviously going to put some oomph in that market.
Well, that's a big deal if it was real. Yeah.
Oh, absolutely. That combined with, 3 or maybe 4 rate hikes and the Fed unwinding their balance sheet, bonds could go.
With markets at 25,000 Dow, right? I mean, the whole basket of everything, right?
Right. There could be a ripple effect here. So, and remember something, stock market, there's some uncertainty now. This change by what's going on, the move in Japan. Look at the Japanese yen, what it's doing today. That's why you want to know. You wake up this morning, you look at your screen, and you say, why is the dollar down so much? Look over at the Japanese yen, a huge move in the Japanese yen today.
So that's trading 111.25 right now, folks, and that put a big boost and be behind the gold market. Gold's up $7, 13.20. Pretty wild.
Exactly right. That's all because of that lower dollar, right, Tom?
Yep. That lower dollar, man. And it's amazing. It's crazy that this was the first time it looked like the dollar could actually bounce. But guess what, man? The sellers are still there, and they're vicious, man.
But that said, the dollar index now, the $ DXY, is still holding 92.
Yeah.
So, it's going to be interesting how that plays out. Obviously, I'm sure that the dollar futures are a little lower than that, but the DXY is still holding that 92 level, which is where we were just a few days ago. Pretty crazy trade here going on in the dollar. I think, we had a gentleman on this morning who said on our morning future show that said this needs to hold 91.5 or look out.
Yeah, watch out. Watch out. No doubt about that. Folks,
we're in some interesting times.
Oh, big time. And, there's not a better time, folks, to come over to our website at TFNN. You're going to see the TD Ameritrade banner on the top of the side. Hit the banner. Bring it up. Bottom line, folks, next, it's the 20th, right, Kevin? Market Drive in Miami?
Miami, down in South Florida. Miami Market Drive, Saturday, January 20th. I'll be there. Our whole staff will be there. A lot. It's a who's who of TD Ameritrade is going to be down there.
1 week from Saturday. Time flies. It'll be here before you know it. Get your plans ready and be there.
Yeah,
that's right. Can't wait.
No doubt about it. It's education, and this is, as a trader, I mean, I love tops and bottoms. I don't know if it's a top, but the bottom line is that it's always nice having great education at those levels because your risk versus your reward goes up dramatically. I mean, that's the bottom line. If you with discipline, right?
Yeah, and for TD Ameritrade clients, all free.
Right.
Thanks, Kevin.
So get out there and be a TD Ameritrade client right here, right now, folks.
Have a great show, man. Have a great day. Thanks, Kevin.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionics, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, everybody. Tommy O'Brien looking at negative markets. NASDAQ negative by 32. S&P's negative by 7. Dow negative by 60. Getting a little bit of a pop, but nothing too substantial. So it's Wednesday, right? We're talking about crude oil. We got crude oil EIA numbers coming out in about 12 minutes. Currently trading at 63.35. Oil getting quite a little bid for itself. Pulling back a little bit as we speak, but nothing too dramatic. So I jumped into the Nadex platform. I'm going to dig in here and take a look at what kind of spreads we have available, as we usually look at some of those volatility trades ahead of those inventory numbers. We'll jump into the 11 a.m.s first. So currently right now, 63.35 is where we have oil trading. If we were looking at the 11 a.m.s, we could use 63.50, maybe trading 63.50 to the upside and to the downside. Let's just see where those line up. So if you were trading these, you'd have value to the downside because you'd be shorting it at 63.50. You have 15 cents of intrinsic value in the negative trade here. So our negative trade would cost us $26. And on the positive side, it's all going to be premium, right? Because we don't have any value until it reaches 63.50. And so for there, we're looking at $11. So you're looking at about $37. If people watch the show, that might be a little bit more expensive than the 11 a.m.s usually are, and that's, again, because you're dealing with 15 cents of intrinsic value in this negative, excuse me, negative one. Jumping around real quick, let's see where the 12 o'clocks line up. They're going to have the same exact price point. Let's see what kind of premium you're going to pay for that extra hour. So again, here would be our bullish trade, all premium, so that's going to be 12 instead of 11. And then on the negative side, we're going to be looking at 28 instead of about 26, so you're looking at 40. So there's an instance where, you know, you could gain an extra hour for $40 for both contracts, as opposed to paying maybe 36, 37 for the 11 a.m.s. And then let's just stretch it one time further and see where these line up. So, okay, we're going to have ones for the 230s as well. And these, of course, are $3 spreads when you get into the bigger daily spreads. So you have more profit potential, as in you have $3 of possible exposure or profit potential. So here's going to be our positive one on the left, all premium. So now you're paying 18 instead of about 12, 13. Now again, you're gaining 2.5 extra hours versus the noon, and you're gaining an extra $1.50 that you might be able to profit off of. And then on the negative one, this is going to be a more expensive one. So you're going to be looking at about $52. for that trade. You know, and on a day like today, with the type of movement we've seen in oil, $3 is not out of the question. I would not say it's impossible, right? So
no, I agree, man. You know, because what you also have is that this is, you know, on a longer term basis, we went up to the swing point. If I bring up a continuous contract for a second, we went up to the swing point. Now we're over it, but this is where you can fail pretty easy if you're going to. Let me just pull this up. Okay, so the swing was 62.58, you know, and we're at 63.36. Because if it makes this swing, it's like oil can go to like $70 to $100. You know what I mean? So it's like, okay, this is going to be a. And last night when those numbers came out, Tommy, so it was a draw of 11 million barrels last night. 100.
I don't know if it's 11 million. Let's get that straight before we. You're talking about the API numbers.
Yeah.
Coming out. I'll Google it, but I don't. I saw something about maybe 800,000 this morning, so I would not expect an API of 11 million. Right?
Might
as well get the numbers. Okay.
Yeah. No, that's all right. You just keep going. I mean,
what are we going about? Okay. Okay. So we laid out that trade. We'll see where oil shakes out. We got about 7 minutes until.
So in that trade, Tommy, right? I was writing some of the stuff down. What would be if I was bearish? What part of that trade would it be? I'm
not sure I understand your question.
It's we know it's a volatility trade, but if I was bearish on oil and I think it's going to pull back.
So all three trades we just discussed have the same exact price points of 63.50.
I got it. Okay.
Okay. So there's no. The only difference is how much premium you're going to pay.
Right.
For time.
How long? Right. Okay.
Now, we add a little bit of price premium in there with the dailies.
Yeah.
Because you have $3 of exposure versus the $1.50. But what's nice about lining these up, when they line up with the same exact price points, which these do, they're all starting at 63.50, going to the upside and the downside, is that they're somewhat similar in that manner, so you get to compare them with, you know, it's like when, you know, you look at science, right? You want to compare it and just isolate one variable with, you know, all other things equal, right? All other things equal. In this trade, all other things are almost equal. You're paying for an option for $1.50 of price potential to the upside and the downside. The only thing that is changing is time. So if they change the price on you, why is that price getting changed? That price is getting changed because of the time that you're paying for. And in each of these trades, you are going to have 15 cents of intrinsic value to the downside. So
that was what I was asking. Okay, right.
They're all the same, though. That's what, you know. So there's no which one. They're all the same that they line up like that. And let's just jump in for the one more last one. So, you know, there's the 8 a.m.s till 2:30s, okay? Those get set at 8, but the daily ones are $5 spreads. Now, these do line up a little bit differently. Let's just say you wanted to be bullish. This is when you could get a trade with a bullish intrinsic value because these line up with $63 being the pivot. So right now we're at 63.35. We were just looking at 63.50, where it'd be 15 cents under, so it would have value to the negative side. Now we're looking at spreads where $63 is our pivot point. We're going to be 35 cents above that value. And to put things in context, here's what your price would be for that. So you're looking at $63.47 on the bid, so that's going to be $47. And you're looking at $62.88 on the negative one, which is just premium. You have no value to the downside because you need this to get under $63 before you have any value to the downside. You're paying $12. So in there, you're paying about $60 for that trade. And again, that goes till 2:30. But on this one, now you have $5.
$5.
So you're paying, you know, a little bit for that extra profit potential on both sides of that. Not much. You know, when you start getting into paying for premium for a $4 move in oil in the span of 4 hours, market's going to be charging you very minimally for that because the likelihood of oil moving $4 in that time span before expiration is so small. So you look at it on the other side, you know, how much would a market maker or a trader have to get paid to allow you to have that premium, that you know, profitability They're not going to demand much because realistically, whatever they demand, they're going to pocket because that's going to happen so rarely. So maybe there's a penny in there on each side for that extra $1, $2 above the $3 movement. But, you know, we've pulled this up many times before, and the $3 spread in oil would be trading almost identical in price to the $5 spread in oil, and that's because the likelihood of a $3 or a $5 move in oil is pretty much identical when you're talking about a 4-hour trading span.
Yeah, there's no doubt.
Yeah.
You know, if we just switch gears for a second, I was listening to the update with the Bitcoin. So Bitcoin is 14,127, but yet Ethereum is still going up.
Oh,
it's pretty wild.
Ethereum's not stopping, man. I went over it. Closed out 2017 at 759, I think, 7 something. And it's amazing that, you know, you always think the tiny cryptos are going crazy, but this is the second biggest one, and it's up almost 100% this year alone. All right, we'll be back with those oil numbers. Come on back, folks. We'll see where those oil numbers shake out.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Tom and Tommy O'Brien. Markets just kind of holding negative with the Dow negative 65, S&P's negative 8. And so we have those oil numbers. So we have crude oil inventories falling almost 5 million barrels, 4.95 million. Gas inventories rising 4.14 million barrels. And let's jump over to the Nadex platform and see how that's hitting the markets. And looks like we're going lower. That might be there might be more of a supply than we thought. And I had pulled up those API numbers. They were talking about them in the den, so it was a decline of 11.2 million barrels last week for the API last night. And not quite the number this morning. And from there, we have oil currently trading 63.20, spiked down to about 63.10. Let's drill down this a little bit. And from there, we've already rebounded. So not too much market action coming off that. But as we all know, if you follow the EIAs closely enough, the first move is always not the move that lasts. And we'll see where the day shakes out.
Yeah, especially with oil at these highs, too. Do you know what I mean?
Yeah.
It's like it's freezing. It has been freezing. You know, this has been quite a move on oil. There's no doubt about that, man.
Definitely.
Go ahead.
No, I was just going to say, so some of those trades we were looking at, remember, just to bring it back in, we had 63.50 being our pivot point. So, you know, whether you were looking at the 11 a.m.s was about $36. So you're looking at 36 cents away from that 63.50 starts being your break even. That's kind of right where we are right now. Maybe we're 40 cents away. At the noons, you had about 42 cents, right? So we're looking at kind of, again, right where we are. And then when you started getting into the 230s, you were dealing with whether 50, 60 cents, depending on if you took the $3 spread, the $5 spread. So we'll see where it shakes out. But, you know, you had a 15-cent head start to the downside, right, when we were going over those. So even though it hasn't moved dramatically, if it moves in your direction and you have that kind of, you know, a little bit of intrinsic value, you have a slight bearish position, but you're taking the trade, looking for volatility, maybe in the bearish side, and it's nice when you get the move in your direction. Because if it went positive side, you know, you'd be needing that 40 cents above 63.50. So you'd need 63.90, 63.85 for break even, as opposed to just a 20-cent slide to the downside, and you're already kind of at break even.
Big difference. Yeah. Huge.
Yep.
No doubt. The you know, the market in general out here is holding pretty good. I mean, it's kind of intriguing. You know, it's like each and every time this market gets red, it's like it doesn't like red, man. It's like it just doesn't. It's like crazy.
Yeah, I saw. I had heard this morning. So 6 straight days for the S&P 500 trading higher to start the year.
Okay.
And it was something like just there's 29 different times that the market's closed positive, 6 consecutive times in a row like that, I think I'd heard. But then it drops down. You know, once you start getting into the 7th, 8th time, there's only like 7 or 8 times that the 7th day continued. Yeah. It's just the law of streaks and averages and probabilities of streaks. You know, we've talked about it before. It's at some point it has to rest, even this market, I think. I know. I say I think as my disclaimer at the end. The day is young. The day is
real. It's real. Let's go take a look at some of the strength versus the weakness inside the Dow Industrials out here. Point-wise, you got United Health putting 13 negative points. Boeing's putting 10. Walmart's putting 9. Positive points, you get J.P. Morgan putting 6. You get United Technologies putting 4. American Express is putting 4. Inside the NDX 100. Strength versus the weakness out here. Intuitive Surgical is up 6%. You get American Airlines up 2.7. Workday's up 2.5. Taken away from it, chip stocks. You get Clack down 4%. AMAT's off 4%. Lam Research is down 3. Let's go see what NVIDIA is doing. That's been a monster. So NVIDIA. Yeah, no big deal. It's down $3. Big deal. This last 6 days, it went from 193 to 225. These are some monster moves, man.
Definitely.
And yeah, I heard this morning. You were talking about this yesterday, I believe, right?
Yeah, it started yesterday. Kodak, right?
No, Bezos.
Okay, sure.
That he is the richest man in the world now. He was this morning, anyway.
Well, just to put, so he become the richest man in the world. He's the richest man in the world ever. That was the distinction.
Ever. Oh,
so Bill Gates, I believe it was it's either 89 or 99 before the pullback was worth something like 100-something billion, but Bezos at 105 billion. No person had ever been worth in history that much money. Now, what was also interesting, though, I read an article, is that if Bill Gates had kept all of the shares of Microsoft that he had, instead of giving them away to nonprofits, the Bill and Melinda Gates Foundation, he could be worth as much as about $150 billion right now. So it's interesting to see that in context because, you know, Bill Gates has had his time in the sun, as in, you know, he's more involved in nonprofits now. He's not the CEO of Microsoft anymore, so he's begun kind of the second phase of that life, being one of the richest people in the world, you know, and so he has begun to give it away, whereas Bezos is just at the beginning. I mean, he's made 50% of his wealth in the last 12 months, I think. You know, when he wasn't even near that list of top richest. He was, but you're talking about he was at 40 billion somewhere in the very recent past, and now he's at 100.
Chump change compared to what he has now.
Right? Yeah. No, I know, man. He's made $6 billion since the start of the year.
My God.
$6 billion with a B.
Yeah. So if we go into Kodak, I mean, this is just so bizarre. It's unbelievable. Kodak, folks, you know, yesterday was at $3.05. Today it hit $13.27. And the thing that's amazing, like when I was looking at this, Tom, right?
Yes.
All that they plan on doing, okay, is that they're saying that they have a way using, they're going to call it Kodak cryptocurrency, right?
Kodak coin. Just
Kodak coin. And it's going to basically be an accounting system for, let's say you take pictures, right? And, you know, like we buy pictures on Shutter, you know, for, you know, cards and all this stuff. That's what it's doing. It's like, really?
Well,
I mean,
when you say all it's going to be doing, all any of these cryptocurrencies are doing is something in this functional management, where they are taking blockchain and using it for functional management. So,
yeah, they're all the same. Exactly.
Well, okay.
Well, hey, listen, a spreadsheet can do that. You know,
okay. That's saying that's saying that Excel already exists. So what's the point of blockchain? I just want to bring things. There's serious value to blockchain, and it is a ledger system. So let's not throw it out baby with the bathwater, as in, you know, all they do is just keep track of a you know, ledger, because that is the entire cryptocurrency blockchain universe. And that's around forever, man. And that's you know, there's tremendous value to that in terms of how it's going to incorporate across the internet in a complete fashion. So I agree, going from $3 to $12 is a little bit crazy, but to just throw it out with bathwater and saying there's no value because spreadsheets already exist. I'm just putting things in context, you know, that's important. We don't all understand the technology yet, and that's quite a whitewash of how this is going to shape the internet in the future. I mean, it is.
Yeah, I just don't see how they're going to make money with it. That's my point. You know what I mean? It's like, okay, so you get a new accounting system, great, you know. But listen, it's how they're trading. That's all that really matters. That's the bottom line. You know, people are going to trade this. They're going to trade it in a big way because they've been making money, and they know that whoever's the first one in it makes the money.
Yeah, totally. And, I agree with that, man. Right.
The rest of them just lay it out.
Be careful. You know, catch the momentum, right? But get out before the party's over. Seriously.
Stay right there, folks. Tommy and I are coming right back. Dow's are making a run higher.
Yeah.
Not higher yet.
We might be in positive by the end of the hour. We'll see.
Down 32. Nasdaq's off 35. S&Ps are off 5.5. Coming right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. If you haven't tried David White's weekly investment newsletter, The Technology Insider, then this month is your perfect opportunity. On January 17th at 5 p.m., Dave will be hosting a special subscriber webinar where he'll be presenting on the newest feature in his newsletter, short-term sector charts that work on both the madness and wisdom of crowds. Join Dave on January 17th as he describes the method he uses to recognize these signals on a sector-by-sector basis, and as he discusses how he used this new tool to buy the gold miners in their seemingly darkest hour in December. And all new subscribers get a 30-day money-back guarantee, so you have nothing to risk. If you're a trader scouring the market for the next great trading opportunity, then now is a great time to sign up for the Technology Insider. For all the information and for details on Dave's subscriber event taking place January 17th, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Tom and Tommy O'Brien. That Dow kind of just holding at that negative 33 mark. S&P's now only negative 5. NASDAQ still negative by 35, though.
Pretty wild, man.
It is. Let's check back in on that oil market and see where we're shaking out. Quite a bit now. We were down to 63.10, oil popping a bit back up to 63.42. And of course, if we had initiated any of those trades, our max loss would have been at 63.50. So that's the exact movement we would not want to see in that trade for sure. We'll see where the day leads us.
Yeah, pretty intense.
It is.
Well, you know, let's go take a look at this 30-year bond. Okay, so what you had, I mean, the 10-year bond, because the 30-year is still quite a way away from the 147, where the 10-year, what it's doing here, we're at 122.25. If I put this on a continuous contract, what you're going to see is that it's pretty amazing the way this is shaken out, actually. Let's do this. So, 2013. So, December of 2013, 122.24 is the swing low, and that's exactly where we are.
Okay.
And what gets intriguing here is this: is that this can be an ABC down. You know, your B point is 123 flat. We'll see whether we get enough volume on this baby today. If we do, then you're talking a 117. 117, you know, 117.22 is February of 2011. So it's going to be intriguing to see, like, okay, is that where we're going?
Definitely.
You know? And the rate, we're 2.56, no, 58. I don't think we've broken this is going to be really wild. Let's see. No, we haven't. It was the high still is 2.6 versus 2.5658 right now.
Sure,
so
that's going back on the 12
months.
Yes.
Yeah.
We got a caller. We got our man Tom from Plymouth. Tom, good morning.
What's happening, brother?
Hey, good morning, Tom and Tommy. How you guys doing today?
We're doing great, man. How you doing?
How are you?
You getting warmer?
Oh, it's beautiful out today.
Perfect.
I'm sitting on my hands right now, though, Tom.
Yeah?
It's getting harder to do.
That might not have anything to do with the weather, though, right?
Oh, no, it doesn't.
Yeah. So you want to take a look at UGAS, right, Tom?
Yeah, I'd like to look at an entry point here. What you guys are thinking? I'm having troubles right now.
So let's go take a look at the gas market first in the futures. So right now we have natural gas is at 291. Let's see what this is. Yeah, this looks like it's gonna. I mean, I wouldn't be biting yet. You know, what you have here, you know, you got over the high yesterday. You're going into the downdraft from the 4th, January 4th. I would just sit here and wait until it gets to the bottom of that 274. I mean, that looks like it's going to get tested again.
Yeah, you think 274 is going to be the test? Okay. All
yeah,
right.
because you have two different things with 274. 274 was the last low, and it's also where it broke topside from 273. See that one, right? 2.734. That's where it really came off the bottom, even though the bottom was 2.562. It got the strength once it hit the 273 number. You know, this is going to be a waiting game here, particularly.
Yeah, and tomorrow, the volume's not that high on the UNG today, is it?
Let's go take a look. UNG, folks, is the ETF structure for natural gas. Yeah, exactly. So, see, what this did, too, just like the futures, right? It went over the high of yesterday. It went into the downdraft of the 4th, and it's failed to hold the high, which is 23.43. And it looks like it's going to have a lot lighter volume. So people aren't biting, man. You know, so that's saying, hey, guess what? 21.88 is game again. And the gap is 21.76, the top of the gap from December 27th. So.
All right, Tom, we will sit and wait.
Hey, well, you know, the way the market's going, man, I mean, you were trading those, let's go over to the VIX a second. Don't you like trading that VIX one, too? I mean, there's a few of these.
I've been watching the TVIX all morning. I was thinking about biting, and it's not really doing much. It jumped up a little bit, and then it kind of fell back. So
what is the symbol? TVIX?
TVIX, yeah.
TVIX. Okay, so you're at 488. Let me put this.
Been up as high as 512, but.
Yeah, see, okay, so this here, I like this trade, man. This is why, for day trade, so watch this. 513 this morning, you have volume, right? You just come back into the spike from yesterday at 490. Yeah, I trade this for the day, Tom. That's where I'd go. Yeah.
Well, you can't go wrong with $5. I mean, that thing is, you know.
Well, you're at 487 if you get 502. 502 is the low of the high today. 513 is the high. I mean, you know, this is the. I really like actually what has happened here, meaning the market has come all the way back again. Well, actually, when I just said that, the Dow just went down 20 points again. The S&P just took 2. I like this action right here today because we've been up so many times that it would make sense that no, you know, everyone's going to keep buying, but it looks to me like this thing's not going to hold, you know. But so that.
Yeah, I've been holding off on that one too, and I just kind of was sitting there watching. It's hard to do, but I may jump in on that one too.
There you go, brother.
All right, guys.
Okay, stay warm. Have a great one, man. Have a safe one.
Thanks, Tom. Have a great day, man.
Yeah, so we get a little volatility out here, man.
And just jumping back to the oil as we speak. So these are 5-minute bars I had up there, and we were almost touching the 63.50, and from there about a 30-cent slide, 63.22. So oil's trying to find which way it wants to go as it bounces around.
Oh, that's good. That's cool that you brought that up. So I'm wondering, see, oil might move this market around today, man, because, you know, that went down 30 cents. Dow goes down 20. It's like, okay, we're getting volatility out here, man. This is good. You know, if we go into that VIX for a second, let's see where that VIX is. So the VIX is at 1030. That's nothing. But at the same point, that spike, yeah, see, I like that trade too. That spike from this morning more than likely is going to get tested. So so if we get that, as you move through the trading day, that could throw some real spikes into two different things. So picture everyone that's long, they woke up this morning saying, "Oh no," you know, even though the market was down what 0.3%, nothing heavy.
Sure.
But then it comes back a few times, and then a lot of traders just say, "Okay, buy."
Yeah.
And if this thing gives way as we go through the day, that's when you'll get some heavy selling, man. Because Yeah, pretty wild.
Totally right. How about Sears? You see Sears is securing a little bit of financing, so it seems like they got $100 million in financing. I saw the story out there. They have like $1 billion to refinance. They're going after $200 million more. I pulled the chart up real quick as we come into break. So we closed yesterday right around 309, 313. Pre-market, we were up to 355, but the market regained a little sanity, 323. So still up about 2%, but you're talking about 8 pennies, you know, market not too exuberant about Sears.
They're probably paying 17 or 18%.
I agree. When I heard it, I said, I wonder what they demanded for that cash, for sure.
Exactly. Stay right there, folks. Tommy and I come right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Learn how to trade options with swim lessons. Brought to you by TD Ameritrade Thinkorswim. Next on TFNN.
Welcome back, folks. Tom and Tommy O'Brien. You get the Dow down 64, NASDAQ down 43 or 0.6%, and S&P's negative by 8. So NASDAQ, a little bit of an acceleration down 0.6.
Yeah, and you know, yesterday, what they had done, let's go look at the NQs for a second. So it was in the morning yesterday, you know, they hit the NQs twice, hit them hard, then hit them in the afternoon, and it looks like, that's got a good spike down there, man. I mean, this thing, let's see, 66.41, yeah. So 66.41, something to watch. We're at 43 right now, but it gets below that little part of the consolidation. Then you really get some action on the way down. So I expect you're going to see this volatility to continue. They're taking the small caps right now. Let's see the small caps. It's pretty wild. What blows my mind about markets in general, it's like this is going to be really amazing if all the markets are waiting for the small caps to reach its high, test its high, and fail. You know what I mean? It's like, okay, is that going to be the first correction of 1%? Yeah, I'm joking, but. Not about if that's what the markets are waiting for. I've seen it before. That it's like, oh my God, it takes so long for these tests to come out. But once they all test, it's like, okay, none of them can make it, or they're waiting for the weakest one to come up and do it. Which yesterday was the day, So, and the test was dramatic in the context that the volume was so dramatically less. Inside the IWM, you were coming into 36 million shares, and you did 16 million. And what's happening today, see, we're already down on 5, so we're going to do volume today on the way down.
Okay.
Yeah, so cooking.
All right, we'll see where it shakes out. We'll see if we end the day in red. Surprise, surprise. We'll find out. We got 50 points of leeway in the Dow.
Totally.
Folks.
Each state.
Yep, you tell them, man. Stay tuned. That's right. Swim lessons right now. Basil, Dave White, Steve Rhodes. Have a great day, man.
Have a great one. Have a safe one. Bye-bye.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.